Hey guys, the stock market headlines this week, they're absolutely crazy. Netflix just did a stock split, 10 for 1 split. Everyone is talking about an AI bubble. NVIDIA's earnings, which happen tomorrow, November 19th. I don't know when you're watching this video. That may actually decide how the entire market ends this year. But here's the thing, if you actually understand what's really going on behind these headlines, you can turn the noise into opportunity. Tonight, I'm going to break all of this down. I'm going to share with you what you need to be watching, when to buy, how to stop guessing your way through the market. Look, this is a really big week, guys. Um, I really see this week as an inflection point for the entire stock market. All right, look, welcome to Investing Uncomplicated, where we help the everyday investor make their money and the market make sense. The market's been really, really strong this year. But as we got into November, we received a lot of troubling and concerning news. There are concerns about inflation as a result of the tariffs that we're finally seeing. NVIDIA has earnings tomorrow, which are coming around the same time where people are concerned about an AI bubble. All of the big tech stocks, they're down right now. Any company that has anything to do with artificial intelligence, those stock prices are down. Um, we are hearing from a couple whispers from people who sit on the Federal Reserve monetary team, the Fed chairman, and some of the other regional chairmen. Are there are whisperers? There are whispers that there may not be another rate reduction in December. Job numbers are bad. Companies are laying off. So there are all of these pressures right now on the economy and the stock market that looks like we may be headed further down instead of going up. But then there's Nvidia. If the stock market had a hero, okay, if the stock market needed a character out of the Avengers, um if there was a savior for the stock market right now, Nvidia is our Captain America. Okay, for me, Nvidia would be our Black Panther. Um, and tomorrow is the day where we'll see if the earnings from Nvidia will be enough. Here's the crazy part about this. If Nvidia's earnings are bad, we may see the market take a nosedive in a way that we haven't seen in all of 2025. We could potentially even see the market drop to a point to where maybe 2025 doesn't end up being a positive return year for the S&P 500. That's what we're looking at. That's the pressure right now. We're currently seeing Bitcoin under, forget Bitcoin under $100,000. There were people who thought that after the election of Trump and all of the major hedge funds start putting money into Bitcoin, and banks started to recognize Bitcoin as a real asset for loans, a lot of people thought that Bitcoin would never drop below $100,000 again. Guys, forget Bitcoin under $100,000. Today, Bitcoin dropped below $90,000. I remember we used to think that Bitcoin could be an alternative investment when the stock market was down. It was like, if the stock market is down, we want to invest in Bitcoin, right? Because I think people thought it was going to move in the opposite direction. But Bitcoin is even down right now. So there are a lot of pressures on our economy. And guys, tomorrow, NVIDIA, it is maybe our last hope. It is the safety on the football field. Okay. It is uh the left fielder. Okay. It is our last line of defense to end the year on on a high note. Here's the other thing with the layoffs, with the concern around jobs, incomes declining, higher cost on goods and services. Hearing all of that information, more consumer debt than we've ever seen before. As we enter the holiday season, a time, typically the holiday season is used as a time of year that saves companies, sometimes saves the stock market. But when you talk about the consumer pressures, lower incomes, less secure jobs, right? It may not be a leap to say that people aren't going to spend as much this holiday season as they've spent in the past. Thankfully, federal workers got back to work this week. I think if we were still in the midst of a government shutdown, it could be even worse. But here's even the thing with that: there has to be another vote in January to determine or to come up with a long term budget solution. If there isn't an agreement on a new budget in January, there could be another shutdown. So if we end up in a position where the market is dropping down, we get bad NVIDIA earnings, bad news around tariffs, jobs, low holiday spending, then get to January and there's another government shutdown, it could really be catastrophic for the next few months for the stock market. So we had to stay tapped in. But here's what you need to know as an everyday investor: when these headlines are scary, when there it seems like there's compounding bad news, when you listen to everything that I just said, you're like, dang, it make you not even want to invest any money. But we have to rewire the way that we think, and we have to find buying opportunities in these markets. Some of the companies that I really like to invest in right now, Meta is one example. Meta is really, really down. All right, it's down a lot, like 15% and counting. Okay. Um, we want to invest in these companies during this bad news because we can never time the market. We never know how far a price is going to drop. That's why I actually believe, even for long-term investors, it's useful to know technical analysis. So technical analysis is where you learn to use stock charts and you get familiar with the anatomy of a candle and chart patterns. The idea behind technical analysis is that the past can be indicative of what's going to happen in the future. It's really, really helpful when prices are dropping because when you're investing in a stock market, you never want to catch what we call a falling knife, right? If you think of somebody being upstairs and they're dropping your pocket knife to you because you left it on your way out the house, you don't want to catch that pocket knife if it's open coming from the second level because that's going to slice your hand up. It's the same thing with investing in stocks. You don't want to try to buy a stock on the way down because it's going to slice, it could slice your portfolio up if you try to buy it at a certain point and it keeps dropping lower. You want to try to wait for that stock to hit a bottom, kind of hit a spot where it levels out. And when you look at a stock chart, you can actually see what that bottom has been in the past and use that to help inform when you may start investing in a company. Even that can be uncertain in some ways. And that's the reason why I encourage everybody to just dollar cost average consistently, have an amount of money that you can afford to put in the market every single month or every single pay period. That's going to help you get a lower average cost per share. But we want to make sure that we're not afraid of these headlines. We should be looking at these headlines as great opportunities to invest because we have not had these opportunities maybe even in several months. Another thing that I want to mention to you all, another headline that's permeating right now in Netflix had a stock split. I did a video about that last week. They did a 10-for-1 stock split that went into effect on yesterday. And people were trying to figure out, should I buy Netflix before the split or after? And I'm like, hey, it doesn't matter. Um, there's an idea, especially for beginner investors, around affordability. Is a stock affordable? Is it out of my price range? Do I need more money to invest in it? Listen, guys, in 2025, affordability shouldn't be a concern. Your primary concern should be in investing in a high quality company because you can buy a fractional share. Okay. Your fractional share will move at the same rate as a full share. Because you buy a fractional share, that doesn't make you less of an investor. Okay. Whatever amount of money you have to invest, you can buy any stock on the market. Affordability when it comes to buying stocks is not a real thing. I don't want my community, I don't want my subscribers to pass up investing in good companies because they think it's too expensive. There's no such thing as expensive in 2025 when it comes to the stock market because you can buy fractional shares. All right. So the answer isn't buying Netflix before the split or after. The question isn't, do I buy this $1,000 stock or buy this $200 stock because it's more affordable? It is to invest in what is high quality and do that consistently. Um, so again, the headlines right now, they're crazy. There are we've heard some really big name hedge funds and some great investors who have sold their stakes in Nvidia, who are shorting Nvidia and the market. That's fine, guys. Like, don't get caught up into that. Don't let that change your mentality of how you want to invest. We want to own Nvidia, okay? And we're going to own it for the next decade. All right. As the stock price drops, it will drop. It is currently dropping and it's going to drop some more at some point. Now, tomorrow, they may have exceptional earnings and it may push the entire market higher, but at some point, it will drop and it may drop a lot. We don't want to be afraid of it. We want to buy it. All right. So, look, make sure tomorrow you guys are tapped in after the market closes to see how Nvidia's earnings look, to see how they perform. I'm telling you, this is our last line of defense for the market. But if the market drops lower, we're not going to be afraid. We're going to invest because we're always investing as everyday investors. We're consistently investing what we can afford. And when we can find good value, we're buying it. All right, guys. All right, guys. I'm out of here. If you haven't already, make sure you subscribe. Turn on your notifications so you know when I drop new content. And make sure you share this video with somebody that you love. Talk to you soon.